wanted to just introduce myself. My name is Kush Kakai. I'm the Business Development Officer here. Looking forward to running through a very, very interesting and engaging webinar. Hopefully, we'll be able to provide some great insights into not only the funding eligibility that we have here at Founders First, but also would love to introduce you to one of our partners who we've been working with quite closely in the past few months. And really just looking forward to answering any questions that you guys might have throughout the program. So guess we can just get started. David, if you wanted to go to the next slide, please. Wonderful. So I'd like to welcome all of you guys to this month's webinar that we have today. Just wanted to run through the agenda very briefly. Really what we were hoping for all of you guys to come out of this webinar with is really just get a better understanding as to, as I mentioned, what our funding requirements are that we have here at Founders First, and really just giving you guys all the context that we can give you on starting a partnership. I see some familiar faces and names in the in the attendee list, so glad to see some familiar names, and really just hoping to answer as many questions as we can, and really just showcase all of the wonderful things that we have in store for this upcoming year. David, if you want to go to the next slide, please. So as I mentioned, my name is Kush Kakaya. I'm the Business Development Officer here at Founders First Capital Partners. I've been with the team for almost 4 years now, so I've really been able to get an understanding as to where we're going on a company level, and really, really excited to be introducing one of our preferred partners, Ryan Ridgway, to this webinar. Ryan, after you.
Sure, Kush, really appreciate it and have really enjoyed our partnership. I'm Ryan, I'm one of the co-founders and the managing partner over at Capital Partners. We work with a diversity of different lenders and credit investors, but certainly hold our relationship with Founders First very sacred for sure, and it's been wonderful to work. So excited to excited to hop on here and kind of explain how we've been working together. And David, it looks like he went on to the next slide, so I'll kind of coalesce that into a quick intro on Cirrus here. But the best way to think about Cirrus is we are a tech-forward investment bank that is focused on scale-ups and the lower middle market. Also startups, depending on your definition of what a startup actually is. We focus on 3 major thematics of credit, one of which is revenue or cash flow based financing, the other of which being asset-based lending, and the third grouping a couple kind of thematics together, if you will, kind of growth debt, venture debt, other sort of esoteric type of financing. And so over the course of our history and our team's collective history, we've been instrumental in facilitating upwards of $1.2 billion in SMB and lower middle market credit, broad diversity of different industries that we've worked with. Average transaction size is right around $4.5 million. That's a little soundbite on Cirrus.
Appreciate that, Ryan. David, you can head to the next slide. So yeah, just to segue into what Founders First does, as some of you guys who are in the audience knows, we are an impact fund based out of San Diego, California. However, we have a very national presence. Really what our mission is and what our value is that we try to bring into the market is for us to really be able to grow these kind of early stage startups and small businesses so that they can be venture backed, hopefully in the next few years. How we've specifically been able to assist with the growth for a lot of these companies that we work with is mainly through our revenue-based financing and our term loan products that we have. As you guys can see, we do have a diversity requirement to our funding. So while we prefer to fund companies that do qualify as minority owned, we still can work with other companies that do not have anyone on their founding team be someone of diversity. Additionally, also we can also serve companies that are located in low to moderate income areas, and any other businesses that have any plans to bring on a diverse workforce that satisfies our diversity requirement. For our specific products that we have here, typically our average check size is around $400,000. However, we can go up to $1 million on the first tranche, and we can go up to $2 million in total financing from Founders First Capital Partners. As you guys can see, we're really focusing on growth stage B2B businesses for us to fund. And while we are sector agnostic, we do have a few preferred industries that I'll touch on later on in this presentation. Wonderful. So, just to give you guys a little bit of some I would say some kind of defining edges that we have at Founders First Capital Partners. One of the things that we really tried to do when identifying what type of financing product that we can offer to the businesses that really that don't hinder their growth, really revenue-based financing came to be the perfect option for us. Not only because one of the biggest things is that we try to be as aligned with our founders as possible, and having a funding product where we do take a percentage of the monthly cash receipts is something that really aligns our performance with the company's performance. As you guys can see, we are a debt instrument, so there won't be any ownership dilution that the company will be experiencing. And when they do, if and when they do decide to exit in the future, they don't have to worry about any of the equity being exchanged or anything like that. Additionally, too, we do offer wraparound services, not only on the capital side, but we have a variety of different accelerator programs, advisory services, and networking opportunities for our clients to be able to tap into. And this slide over here really just kind of highlights what our specific requirements are, segmented based off of what we look for in a revenue-based financing loan, and then when we're also sizing up a term loan product. One of the biggest things that I really just wanted to emphasize from this slide is that we do fund companies that are only B2B, B2G, or B2B2C in nature. So no CPG, no consumer product goods work for us. We are strictly only in the business of funding B2B companies. As you guys can see, one of the biggest differences between the revenue-based financing and our term loan products is that the monthly payment that we have is going to be variable on the revenue-based financing side, whereas with our term loan products, it is a fixed payment every single month. Typically for us, we take anywhere between 2 to 8% of the monthly cash receipts to be able to pay off the loan. And that rate is determined in our underwriting and our due diligence phase. In terms of repayment periods, as you guys can see, for our revenue-based financing, we're typically around 2 to 5 years. And then for our term loans, we can go as low as 12 months. And then on our term loan side, we can go as low as $50,000, and we can go up to, as I mentioned, $2 million, with the exception that there is the cap at $1 million for the first tranche. And also, just lastly, I always wanted to point it out, we do require personal guarantees as part of our process when we're going through due diligence. And more than happy to touch on that in future calls or later on in the call, later on in this webinar, if there's any questions regarding that. Wonderful, and would love to kind of transition into into one of our case study, which is where Ryan and I got to meet each other and had the pleasure of getting to fund one of his clients. So David, if you can go to the next slide. Ryan, would love to just get a little bit of context on Tailored Industry. I know you were working with them and are very close with the founders, so would love just a little bit of context, and we can have some back and forth dialogue from there.
Yeah, for sure. No, this is a really cool company, great management team. The founders who really are impassioned around the business and what they're looking to solve. But they sit at the intersection of being a technology company, with a portion of their revenue being recurrent in nature, and being kind of an old school textiles and apparel manufacturer at the same time. And so they're kind of bridging two different worlds from a revenue model and a core focus. But if you were on the first few calls that I was on with Tailored, you could kind of hear the frustration in discussing their needs and their use case and their ideal funding instrument with other groups already, both bank and non-bank entities. And I get, without getting too in the weeds with information, essentially what they were up against, and this is, in my opinion, from what I've seen, kind of a recurrent theme across the rest of the industry. You have numerous big incumbents that really adequately fulfill the needs of kind of traditional SMBs and Main Street America down within the quantum of let's say like 25,000 to a couple $100,000 in kind of quick acting capital. And then on the other side of that spectrum, you have the private credit marketplace, who sometimes doesn't want to get out of bed for a transaction unless it's size kind of 5 to 10 million or above, because the reality is it's going to take the same amount of effort and due diligence from their side to underwrite $1 million transaction versus a $10 million transaction, and so it's just not worth it for them at the end of the day. And so what I really like about Founders First is that they align with our model in kind of serving this in between category. And Tailored Industry is a company that I would certainly kind of define in that in between category. Wonderful company. They've seen great growth. It doesn't exactly fit the perfect mold for like venture capital, although they have raised some venture capital over time. Also, just equity land is very difficult right now. As many of you guys might be aware, post 2021, a lot of the companies that were out raising at 20, 50, 100x multiples on revenue have kind of been slashed back down to size. And so going out and running like a process around around a price round or even a convertible round, et cetera, can just be quite difficult. But then again, they kind of meet the merits and meet the overall kind of thematic of this like venture-backed company that's had some good marginal growth, but at the same time hasn't had profit kind of catch up to that yet. And so from a traditional banking perspective, isn't a ton of interest there. If you just look at it on its face as like a multiple of net profit or earnings, not a lot of like interest there to really get excited about. But again, going back to the use case here with Founders First, what I really like is that even though they were just marginally profitable, they were able to remain very story based and a lot more qualitative in their approach, and actually take things into consideration that a lot of other lenders will not, such as underwriting with an understanding of what's going to take place in the future on a pro forma basis, and not just on previous 12 months revenue. And so I've talked far longer than I anticipated, but quick summary here basically is they were troubled, they were very frustrated, they were actually hesitant that we could even bring them a solution, but thankfully we were, and ended up being a perfect fit for their needs.
Definitely. I'm glad it happened. David, on to the next. Wonderful. So would love to just kind of give a little bit more of an idea as to what it's like working with us here at Founders First Capital Partners. So what we've done on our next slide is really just do a process map as to exactly what the process is for working with us, and typically what it's like to bring on a client for consideration for a loan request. Typically, what the method is that I like to get on a call with the founder or with the partner that we're working with. Typically, for most of the clients or most of the brokers that I work with who do send over companies, we typically have a conversation before I meet with the founder just to see if it is actually a fit for us. And then if it is a fit, then what we'll do is we'll schedule that discovery call with the founder and with the broker or the partner that sends us over. Once we've completed the initial call, part of we essentially go into document collection, and part of that process is syncing their backend financials with our with our system that we have. So for this, we use Codat and Plaid to be able to get an API sync. And essentially, we have a limited access view into their P&Ls, balance sheet, and cash flow statements. Once we have received all of the financials from the borrower, I then schedule time with my investment manager and give him a pitch on the company and review the financials for the initial review. If all else checks out and we're ready to move forward, we typically schedule an exploratory call with the founder, partner, along with our underwriter and investment manager, who will then go into a further deep dive with the founder or anyone from their finance team who can explain more details regarding the financials. From there, our underwriting team essentially works to a term sheet, And once the term sheet is signed, then we go through our full underwriting process and due diligence process with also background checks. And if everything else works out perfectly, then we deploy funds. So this is typically what our average partnership path is like. I always like to make sure that I keep all of my partners that I work with, on the same page as me. I like to include them with any call or any interaction that I have with the founder. So just wanted to keep you guys and make that point and reiterate that as much as possible. On to the next. Ryan, I know you kind of you kind of touched on some of your experience as to why you came to us in the first place, but would love to hear more from you as to, what your experience was working with us.
Happy to share. My experience was overwhelmingly positive. There's a couple things that stick out to me in particular, and I'm going to approach this from the perspective that most participants on the call are in or adjacent to the space of business financing and have had conversations with other lenders and so on. The when I categorize different lenders, there's one approach that says, hey, we're going to basically put out a pre-approval without much interaction and perhaps without the full story on a business yet, a pre-approval or an LOI. But it can become difficult and a bit painstaking during the diligence process, and the terms can kind of start shifting around. And then the opposite of that is it can be very painstaking with some groups on occasion to actually get to terms in the first place. But of course, if it's painstaking at the onset, there's less of a likelihood for those terms to kind of shift, and the diligence process can be a little bit more friendly. I think Founders First is really unique in that communication and expectation setting was really at the forefront of everything that we did together and continue to do together. And by that, I mean, even before, kind of moving forward and just with, just summary level kind of financial data at the onset, we were able to kind of align and kind of soft circle from a sizing perspective what this transaction might look like. And then as we continue to move through the process, we got more certainty, more certainty, more certainty until the contracts reflected exactly, what we were talking about at the onset. So I think that sense of kind of authenticity and communication is really important. And then the other thing, just real quickly, that stuck out was uh, a few days or upwards of a week can feel like a really long time when you're trying to get a transaction
Oh,
done. It, it
100%.
can feel it can feel like eternity, and it's like, oh gosh, this deal's done, or like, what the heck is going on? And so Kush, I just really appreciate that you and myself could stay in touch every couple days throughout the closing process, even if it was just a quick check-in, quick voice note or whatever, just to say, hey, what's going on, any updates, still digging in, here's one question we have. Just because I'm a founder myself, and I'll occasionally forget what someone told me, earlier that morning, let alone 3 days ago. And so,
Exactly.
it's it's that aspect is important and warmly appreciated as well.
I'm glad you like that experience. And I always love hearing that because honestly, I can just say the same thing. It was an absolute pleasure getting to work with you too. Love those constant chats that we had. Um, and I know also, I guess going into the next question that we had, I know you had mentioned earlier about, some of the reasons as to why Founders First was the lender that you wanted to go with for tailored industry. And really that was just due to the fact that their previous experiences that they had in other financing prospects just didn't pan out. Is there anything else that you liked about Founders First, or anything about Founders First specifically that was really just, kind of like we were just the right fit at that point in time? Because that was something I remember I heard from Eric, the founder, one of the founders of Tailored Industry. He just loved the model itself.
I love the model as well, and your model actually closely resembles our own model at Cirrus. Not fundamentally, we're an intermediary or an advisor. You guys are directly allocating capital, but really in terms of an approach of what's the term? Oh, being a cyborg but not a robot.
Yeah.
I have
Yeah.
I have someone who puts together a weekly newsletter that we send out, and it's part of like our little catchphrase. Like we're part tech, we're part team because cyborgs are cooler than robots. But
Totally.
I like that fact about you guys as well. I think there are a lot of lenders that are actively involved in the quantum of like 250 to $2 million worth of capital, but they are kind of over automated in a way and just
Mm.
very programmatic, whereby yes, you can theoretically kind of connect in systems of record, you can get terms back pretty quick, but there really isn't much of like this sense of like working with the company, understanding the story, what's the need going to be in 12 months versus today, can that facility actually scale with them to fulfill their future needs, and that's something you guys from a human perspective really kind of slow down and do right. So yeah, I think in this setting in particular, for the tailored industry use case, it was the perfect fit.
Amazing. Glad to hear that. All right. So this is the
Yeah.
next question that we have. Ryan, did you wanna just read it out real quick?
Yeah, for sure. What is your average time frame for underwriting and approval?
Yep. So typically for all of our loans that we have, we like to say we can move as fast as as the borrower or as your client can move. I've seen at times we've had our quickest deal to date has been 20 days straight, and that is from the first conversation until funds are deployed. I've had other conversations that lasted 2 to 3 months, as I'm sure a lot of you guys in the audience have worked on. I would say on typically what our range is anywhere between 30 to 45 days. I know I understand and recognize that business owners typically have a lot on their plate. I know capital raising is a really, really important priority for a lot of these businesses, but I understand that sometimes things come up for them. So I would say around 30 to 40 days is what our total time frame is, with the exception that we can move as nimbly and as fast as the founder itself. And then, yeah,
And what benefits and support does Founders First offer beyond just deploying capital at the loan disbursement?
definitely, definitely. I know I touched on this a little bit earlier in the webinar. But simply put, as we are a direct lender, we actually do have a second entity of our business, which is Founders First CDC. This is really where we offer our expansion advisory support that we have, along with also our one-on-one coaching. This has been something that we have worked with quite a few many of our portfolio companies in the past, and really just anyone who comes in through our accelerator programs who are looking for a little bit more one-on-one kind of coaching, along with just a helping hand to assist them with introductions, networking, being able to handle being able to really draw out what their playbooks are. So these are all things that we offer as wraparound services. And lastly, one of the things that we've done too is we've been able to we've had a pretty extensive relationship with this CPA and accounting firm based out of San Diego called Terra Business Solutions. Really, what they as you can see, they are a bookkeeper, and also they assist with tax preparations. But essentially, for any companies that we have that do come for us for funding, and who their financials are just not the best, I would say the best formatting, and maybe there might be some issues here and there. We have an agreement with Terra Business Solution for them to be able to offer a free consultation, and then also if they would like to go in for a cleanup, then they can go in for an added cost. So we've been very, very fortunate to have them as one of our accounting partners to assist the companies that we fund, and also just to use as a resource for anyone who comes through our doors. Next slide, please. And I know I touched on, some of the accelerated programs, and I personally, I would say I'm a little bit biased. My mother actually attended the boot camp program for her business and was able to really scale up her business. And as someone who also worked on the program side of things and administrating some of those, I really was able to see the firsthand account of the impact that this education has on some of our businesses. And it's truly incredible to see that there are people that are taking time out of their days to really be able to grow their knowledge and grow their business from inside out. So these are the three business accelerator programs that we have. As you guys can see, for our challenge program, the annual revenues of the businesses have to be around 50 to 250K. Then for bootcamp, 250K to a million. And then for fast path is 1 million to 5 million in annual revenue. If you guys would like to know any more information about this, I'm more than happy to send this out to whoever would like. Wonderful. And I know a lot of you in the audience probably have this question, and we're either waiting for this, but the age-old question is, what type of businesses and industries can we fund? So if you go to the next slide, David, these are what we have come up with as our four ideal customer profiles. And this is, we've had a lot of continual effort with our underwriting team to really just identify what types of businesses have a higher likelihood of getting funded by us. And I use that very, very loosely, and I use that very specifically because we do not offer any pre-approval processes. Now, there's inherent things about these specific types of industries and the businesses that are in these segments that align with what our underwriting requirements are. So we love SaaS businesses, any software products, anything like that. That's I would say, our first and ideal preference that we have for segments and industries. Then we can go into tech-enabled services. So these are your IT consulting businesses, things of that nature that do serve B2B companies. And then next we have tech adjacent staff augmentation and management consulting. So this can be, Salesforce administrators, things of that nature, Microsoft Office suite specialists, things of that nature. And then also consulting businesses, of course. Then lastly, we have our repeated services that are on the B2B side. Typically for these businesses, we like to see longstanding contracts along with also some sort of recurring revenue element to their businesses. And I would say some examples that we've had in the past of companies that we funded have been like securities. A securities agency has been something that we've done. So they do in-person security along with also cybersecurity, things of that nature. So these are the industries. These are four, I would say, our ideal customer profiles. And if you go to the next slide, David, these are some of our fully prohibited excluded industries. Cannabis and marijuana, weapons, gambling, liquor sales. So this is any company that has liquor sales as part of their revenue. This would include bars, nightclubs, and restaurants, and then nonprofits. Now, there are some other industries such as real estate that are a little bit trickier for us, and we typically can chat about those on an ongoing basis and would love to connect with anyone who has any further questions. But I think for right now, that's all that we have on our slide for our presentation today. Would love to open this up for any questions that you guys have. I saw that Greg, nice to see you again. One of your question that you had was, how are warrants determined, and does this add to the time it takes for due diligence? To answer your second part of your question, Greg, no, it does not add any time. It's actually already factored into our due diligence timeframe that we have. And then how the warrants are determined, typically what we do is we set anywhere between 1 to 1.5% ownership, depending on the deal and depending on how we are our underwriting process that we have. More than happy to get you some further information on that if we connect on a call. We can go to the next slide, which showcases our contact information. So here we go. So if you guys wanted to take a picture of this, please feel free to reach out to me via email, or you can use my work line as well. Ryan, he's a great resource, always looking for new clients, and they just do some tremendous work. So we also included his contact information. Ryan, is there anything else that you wanted to share with the group before we finish the webinar?
I don't think so. I appreciate you guys having me on, and just as Kush alluded to, happy to be a thought partner in your success as well. Feel free to shoot me an email, bug me about anything you need, and appreciate the time today for sure.
Of course, Ryan. Well, thank you so much. Really appreciate it. Thank you all, everyone, for taking the time to speak with us and to listen to our webinar. If you guys have any questions, again, please feel free to reach out. And looking forward to working with all of you guys soon. Take care.